Hello, I'm Bernard Hickey from interest.co.nz and welcome to our monthly gold report with Mike O'Kane from NZ Mint. Welcome in, Mike, where we look at the gold price, what's moving it up, down, the various trends around the world, demand, supply. What are we seeing at the moment with gold price, given the turmoil in Europe?
Beginning of this week, we actually saw the gold price surge up to about 1745, 1750. It hit the resistance point. It's pulled back down. It's sitting 1730-ish US dollars. Most of it's driven by Euro news, obviously, as we're waiting for things to eventuate from that region. Again, people are sort of sitting back and waiting. When the price moves up, there's profit taking going on. But in the background, there's still a lot of safe haven buying, so people are still buying with an eye to things either going seriously wrong in the eurozone or hopefully things going right and economic stability and the outlook picking up. And
what's interesting about the eurozone crisis at the moment is that the ECB, the European Central Bank, is refusing to print more money, and the Germans don't want them to print more money. Surely that's bad for the gold price in the long run, because the theory is when money is printed, money supply expands, then the gold price increases. So maybe not so good for the gold price.
And that's probably a fairly accurate synopsis. Essentially, as more money is entered into the system, M2 increases, and therefore historically gold has traded in the same direction. It's also inflationary, so you're going to end up with a scenario where the gold price may drop, but off the back of that, what happens to the eurozone if they don't print more money? They end up in more shtuck than they already are. It's a balancing act, and it's going to be very fine for a long time to see which way A, the eurozone goes, and B, the gold goes with it. But it's not just the eurozone that's driving the gold price. We've always got to remember this is a global product. It's traded in Asia, the US, Europe. So whilst what's going on in Europe might not be so great for the gold price in the short term, there's going to be a lot of people looking at the euros and saying, well, we're going to move into something a little bit safer, and it's where gold's probably going to mitigate a little bit of its loss on the fly.
Some people are going to US dollars and US treasuries at the moment.
Yep, and as the US strengthens, it pushes up the ability for people to want to get into alternate or risk-based investments, and gold may actually pick up off of that. On the back of it, a lot of people aren't comfortable with the position the US are in still. I mean, they've had some good news coming out recently, but there's still a balancing act going on there as well.
The other thing to watch in Europe is that some of these central banks underneath the ECB actually have quite big gold reserves.
Yeah.
So what's the talk around that?
Well, a lot of them have been buying up gold quietly over the last year. As said previously, the central bank gold agreement, which consists primarily of the Europeans, the IMF, a lot of the American area, they've historically sold about 500 tonnes of gold a year. This year they're looking to be buying about 500 tonnes. So that's a lot of gold coming into the central bank's holdings. There's been rumour posited that Italy might offset some of its gold holdings to Germany to cover some of its debt, and that could be done around a lot of places. Most of those European nations still hold fairly large amounts of gold from historical times.
That's one way for the Germans to get hold of the gold.
Yeah, and that's probably one of their goals.
And the Greeks, they had quite a bit of gold too, which the Germans got hold of.
Long and short of it, it seems to be a big flow in one direction throughout Europe, and Germany seem to have an eye on the long term rather than the short term, and gold holdings for them seems to be a long term plan.
Now, looking at the United States and what's happening there next year, we're going to see a big drop in government spending because the debt ceiling rules, they couldn't find a new solution to reduce spending. There's going to be forced spending cuts next year, potentially a slowdown there and a slowdown in Europe. Doesn't that reduce some of the inflationary pressures in the world and therefore make gold slightly less attractive?
It does, and as with any commodity in a slow economy, it is probably going to either stagnate or drop in price over a period of time. But at the end of the day, we're looking at something that's not normally measured in months or even years, but something that's measured over decades. And the people that we're seeing buying today aren't looking at the next 24-month period. They're actually looking at the next 5-10 years. And the majority, and this even goes down to institutions and private individuals, are looking at it more as a safe haven rather than what the price is doing. So they know that if things come right, they've got an asset and that's fine. If things don't get better, they've got something that's just sitting there and doing them a favour in the long run.
And what are you seeing in terms of trends of imports, people selling back gold into New Zealand, and New Zealand as a place for people outside of New Zealand to buy and store?
Well, as I've mentioned before, we are, this year in particular, we've seen a lot of interest from offshore investors, primarily in the US and the American region, but we're also starting to see a lot more Europeans who are looking to buy and hold gold and silver here in New Zealand because of the things we offer, which is a secure, safe
Are we a bolt hole, are we?
Well, a little bit. I mean, we're at the end of the world, so it's all one-way traffic to get down here as far as we're concerned. But that appeals to them. We're politically safe. We have a good banking system. The risk of fraud is low. So we sort of tick all the boxes required just to put something away for a safe period of time.
Dumb question, which I'm obliged to ask as a journalist. How does the gold get here? Does it fly in? Does it come in by boat?
Majority is flown in. It's the value of it makes it worthwhile to put on a plane and ship in regularly.
Does it have its own seat?
I've never actually been on a plane with it, but I'd assume so.
Much excellent. Well, Merry Christmas, Mike. Thank you very much for coming in. That's another of our monthly gold reports. I'm Bernard Hickey for interest.co.nz.